It has been a record year for gold. The precious metal is at an all-time high after skyrocketing about 30% since the beginning of the year. So where does it go from here? To help us answer that question, let's check in with Chris Taylor, CEO of Great Bear Resources. Good morning, Chris. Everybody's talking about gold. My question to you, have we hit a top? I have to think we're in a bubble, but have we hit a top here?
We think about this all the time in our industry, of course. We're the guys that find it or take it out of the ground. So it's quite interesting. Like if you actually think about the gold price, I don't think that it's actually peaked relative to historic value. And that's really because of inflation. Right. So I think a peak in gold was about $1,913 or so US back in 2011. But if you adjusted that for inflation, you'd actually expect gold right now to be about $2,200 an ounce. So, sitting as we are above, I think it's about $1,940 odd an ounce right now. You still have a couple $100 to go just to match where you were back in 2011. And that's just a fact that your dollars are not worth as much as they were. They're worth about 15% less than they were just 9 years ago.
To that point, do you think it's time to just say, you know what, the dollar is depreciated, we're piling on a lot of debt on into this country. Is gold simply the new reserve currency?
I mean, my view is that gold has always been another currency. So it floats relative to the other fiat currencies in terms of value. So if you thought about it, we were just talking about a story. If your grandmother bought gold coins back in the 1980s, those gold coins are they worth more or are they worth less in purchasing power than they were back then? Well, it's debatable. But, I think over time, if you had a gold coin in about 1920, say 100 years ago, you could probably buy yourself a nice suit with that gold coin. If you had a gold coin in 2020, you could probably buy yourself a nice suit with that gold coin. So the relative value really, perhaps it hasn't changed as much as you think.
Yeah, I like that. I get myself a $1,932 suit. But Chris, I want to talk about silver because it's been playing catch up. A lot of people look at that gold to silver ratio. And how far can silver run? A lot of people think it's automatic that it's going to retest its $50 high, but I don't know. What are your thoughts?
Well, it all depends whether silver reverts to a mean in terms of its trading versus gold. Silver is a bit of a different commodity because it's a precious metal, but it's also an industrial metal. There's a lot of silver used in manufacturing, so silver is consumed. So there's a higher rate of silver production, but there's a higher rate of silver consumption. And silver is not used. It's not like you have an American dollar pegged to silver anymore. Certainly this would have been the case, very a long time ago historically. I think you can see, additional upside in silver, but you have seen a rapid price ascent, and you should be getting into the range where you're trading at close to that historic ratio. So, maybe something like another 10 to 25% price appreciation in silver to sort of match it historically against where it should be with gold.
Chris, what do you see as the main catalyst for the rise, this meteoric rise we've been seeing? We were talking to a guest earlier about the Fed wanting to push inflation a little higher. We know that traditionally gold has been a hedge against inflation. Is the fear of inflation what's driving this? Is it the weak dollar driving this? Or is this really just a perfect storm for those looking for gold?
I think you can factor out the amount of if you look at the price increase in gold, a certain proportion is due to inflation and a certain proportion is due to the relative bidding value. I'm sitting here in Vancouver, Canada. Gold reached its all-time highs many, many months ago in Canadian dollar terms. So this is a new event in the US in nominal US dollar terms. But for us, we've been living with it for many months. So if you think about where it should go, if we had this conversation, say it was 2030, it's 10 years down the road, we should be talking about gold worth about $2,500 an ounce US. And the further you go in time, the more it's going to be worth. As a guy that finds gold and is working for a mining company, really the last thing that somebody in my chair wants to see is gold have a meteoric rise to $3,000 or $4,000 an ounce US, because that means there's a chaotic world economic environment. And if I'm producing gold in a non-safe jurisdiction where they might be desperate economically, they might nationalize my asset and take it out from under my feet. So really what I want to see is an incremental, stable increase in the price of gold. That's going to let me run a profitable operation, and it's going to reduce the political risk because, if you're sitting on a gold mine, you're sitting on a gold mine. That's a tempting asset for some companies to want to take out from, from under your feet.
I like that. That's very important to note those political risks. I want to ask you about central banks and then the retail investor. Central banks like China, Russia have really been loading up on gold over the last few years, de-dollarizing. Then you got the retail investor, and we're seeing some signs that they're alive and well in China, but it's gotten pretty expensive in India, and they're probably getting a second wave right now. What do you see on the central bank and retail fronts?
I think the political climate that we're in, there's going to see competition amongst these emerging powers against, the old strong power of the United States. So these countries realize that they own a lot of U.S. debt, obviously, but it's a huge hedge against U.S. influence to be able to control amounts of gold as well. And, historically, we've all had gold as reserve currency or currencies that are pegged to the value of gold. I think in any sort of political environment where you compete with the United States, you probably want to see a reversion to that historical mean because it reduces the power of the US to be able to control global politics. So if you're asking me about central bank purchasing of gold, I can't see that letting up anytime in the near future. If you're a person in India trying to buy gold, which is be traditional, trying to make your bridal dowries and save assets in the form of gold, a lot of it's in jewelry actually there that you would wear, you would be having a really rough time right now trying to get your hands on physical bullion. So I feel some pity for those people, but it's an opportunity for those of us that live in developed countries. We can purchase ETFs, particularly we can purchase equities in the gold space, and that's a great way to get exposure, especially if you're looking for the extra leverage that comes with owning something that's levered to gold. And that's a huge opportunity right now because gold producers, gold miners are trading still at pretty steep discounts relative to where they were during the last gold bull market.
So is the sky the limit here, Chris, or are you seeing some headwinds? What's a possible headwind for gold in the near term?
Well, at some point, the current, stimulus, the monetary policy will be fully factored into the gold price. And I can't see that the United States is not at any risk of, existential collapse. So at some point, once all the stimulus is factored in, you're going to have removal of that, immediate pressure to buy gold. But, you already will have created the damage. The extra money will be in the system. Inflation will be rearing its ugly head. And that means that you will have pressure over the long term to have higher gold prices. You always do anyway. As I was saying before, you expect prices to rise over the long term. What we don't want to see is that price get out of control. If gold is trading at $3,000 or $4,000 an ounce, you're probably more concerned about the price of food and more concerned about the price of ammunition than you are about the price of gold per se.
Yeah, good point. We're going to leave it there. Chris Taylor, CEO of Great Bear Resources. Thanks for being with us.